Hello everyone. This video is a comprehensive resource focusing on Cyprus's tax system and its position in the global tax landscape. It covers a wide range of topics, from income tax and corporate taxation to VAT, inheritance tax, and international tax principles. The document is structured with case studies, comparisons to other jurisdictions, and practical applications for tax professionals, providing a holistic view of Cyprus's tax framework. Key sections and highlights. 1. Income tax computation and employment income. Cyprus employs a progressive tax system with rates ranging from 0% to 35%. The first €19,500 of income is tax-free, offering relief for lower income earners. Employment benefits are included in taxable income for residents, while non-residents are taxed only on Cyprus-sourced income. Case study: a Cyprus resident earning €50,000 annually, including €5,000 in benefits, is compared to individuals in the UK, US, Germany, and Singapore. This comparison highlights Cyprus's competitive tax rates for personal income. 2. Property income, trust income, and capital gains tax. Rental income is taxed as part of total income. Trust income from Cyprus companies is not subject to taxation or withholding tax. Capital gains tax, CGT, is 20% on the disposal of immovable property, with specific exemptions. Case study: a non-resident sets up a Cyprus International Trust, CIT, to hold rental properties and shares. Comparisons with jurisdictions like the UK, trusts taxed up to 45%, US, Germany, and Singapore show the advantageous tax treatment for trusts in Cyprus. 3. Inheritance tax and personal tax administration. Cyprus does not impose inheritance tax, making it attractive for estate planning. Efficient tax administration ensures compliance and minimizes risks for taxpayers. Case study: a high net worth individual relocating to Cyprus for retirement. The absence of inheritance tax in Cyprus is contrasted with the UK, up to 40%, US, estate tax up to 40%, and Germany, inheritance tax from 7% to 50%. 4. Sole traders, partnerships, and corporate taxation. Cyprus's corporate tax rate is 12.5%, one of the lowest in the EU, and can be reduced to 2.5% through incentives. Tax loss carryforward is allowed when transitioning from a sole trader to a company. No upfront costs for sole traders. Case study: a tech startup considering incorporation in Cyprus is compared to other jurisdictions like the UK. Corporate tax rate increased to 25%, US, 21% plus state taxes, Germany, 30%, and Singapore, 17%. Cyprus emerges as a favorable jurisdiction for startups due to its low tax rate and incentives. 5. VAT implementation and overseas taxation. Cyprus's standard VAT rate is 19%, one of the lower rates in Europe, with zero VAT on basic items. Historically, Cyprus has been a tax haven, attracting international businesses. Case study: an e-commerce business based in Cyprus selling goods across the EU. VAT compliance is compared with the UK, 20% standard VAT, US, complex state sales taxes, Germany, 19%, and Singapore, GST of 7%, increasing to 8%. Cyprus's VAT regime offers simplicity and competitiveness. 6. Ethical considerations and tax avoidance schemes. The resource emphasizes the distinction between legal tax avoidance and illegal tax evasion. Ethical challenges of aggressive tax planning and the importance of corporate social responsibility, CSR, in tax practices are discussed. Case study: a multinational corporation exploring tax planning strategies across jurisdictions. The ethical implications and reputational risks of these strategies are analyzed, highlighting the need for a balanced approach. Case studies and practical applications. Cyprus tax residency, Dr. Zowi's relocation case study. Dr. Zowi qualifies as a Cyprus tax resident under the 60-day rule, meeting criteria like maintaining a permanent residence and being employed in Cyprus. His income sources, pensions, rental income, trading goodwill, dividends, etc., are analyzed for tax, special defense contribution, SDC, and GE-SCI, General Healthcare System, contributions. Key insights. Dividends and interest, exempt from income tax but subject to SDC and GE-SCI. Rental income, taxable with SDC deductions. Trading goodwill, exempt as it relates to a business outside Cyprus. International corporate structure and transfer pricing. The resource discusses related party transactions under Section 33 of Cyprus Income Tax Law. Control transactions, e.g., loans, sales, are analyzed for compliance with the arm's length principle. Safe harbor rules and transfer pricing documentation are emphasized as tools to ensure compliance and reduce administrative burdens. Double taxation agreements, DTAs, and multilateral instruments. MLI Cyprus has signed over 60 DTAs, based on the OECD Model Tax Convention, to prevent double taxation and facilitate international business. The Multilateral Instrument, MLI, signed by Cyprus in 2017 and ratified in 2020, has introduced anti-abuse provisions and improved dispute resolution mechanisms. Case study: the impact of MLI on Cyprus's DTAs is compared to the UK, Germany, and Singapore, demonstrating how Cyprus aligns with global tax standards. Advanced topics in international taxation. Stock options and employment income. Cross-border taxation of stock options is analyzed, emphasizing the complexities of timing, grant, vesting, exercise, and jurisdictional allocation. Case study: an executive working in Cyprus, moving to the UK, and selling shares in Germany faces potential double taxation. Solutions include leveraging DTAs and OECD guidelines. Natural resource taxation and permanent establishment, PE. The concept of PE is crucial for taxing multinational entities in industries like natural resource extraction. Case study: offshore oil exploration in Cyprus's exclusive economic zone, EEZ, is analyzed, with tax implications for PE determination and DTA applications. Cyprus tax incentives. IP box regime provides an effective tax rate as low as 2.5% on qualifying IP income. The regime aligns with OECD standards and promotes RAND activities. Participation exemption: dividends and capital gains from share disposals are exempt from tax. Notional interest deduction, NID, encourages equity financing by offering deductions on new equity. Case study: a tech company leveraging the IP box regime and participation exemption to minimize tax liabilities. Ethical and practical considerations. The resource emphasizes the need for tax professionals to balance tax optimization with ethical considerations. Practical advice includes tracking residency days, leveraging non-domiciled status, maintaining proper transfer pricing documentation, and understanding safe harbor rules. To conclude, this resource provides a detailed analysis of Cyprus's tax system and its comparison with other jurisdictions. It highlights Cyprus's competitive advantages: low corporate tax rate, absence of inheritance tax, favorable trust regulations, and extensive DTA network. The importance of staying informed about global tax trends like BEPS, digital taxation, and the MLI. Practical tools for tax professionals to navigate complex international tax scenarios. This video serves as an invaluable guide for tax professionals, businesses, and individuals seeking to optimize their tax positions in Cyprus and beyond. Thank you for watching. Please like and subscribe for much more to come soon.